What's up guys, Rodrigo here, welcome back to one more video guys. As promised, today I'm going to be teaching beginners how to trade, how to start trading from the beginning. Of course, if you're a beginner, you don't even know where to start. And I know this because I have many friends that come to me asking, hey, where should I start from? And my answer to this is memorize chart patterns, assuming of course that you already know how to establish support and resistances. And that's why I will be using this video today to teach you how to read chart patterns. But of course guys, before I start, don't forget to smash the like button already, and if you're not a subscriber, subscribe to the channel. Let's go for it. The first one that I want to show you today is the bull flag. How does it work? The structure of this pattern is like this. We have the pole and we have the flag. What does this mean? It means that after a huge leg to the upside like this, for example, the price action will show some correction, going down a little bit, but as you can see, always respecting the line of this resistance and the line of this support. And at some point it is going to break the level of this resistance to the upside. And once we have this breakout right here, it is going to be our entry point of our trade. And the target for this pattern is very easy to calculate. You just take the length of the pole right here and you project from the moment of the breakout, showing to us that this level right here is going to be our take profit. The bear flag is going to be absolutely the same thing, but to the other side. So it means that we are going to have a leg to the downside on this manner, and then after this we are going to start consolidating, forming some upwards movement like this. Of course guys, always respecting this level of resistance and this level of support. And once we are going to break this level of support here to the downside, then you know already this is our entry point, and the same thing repeats itself. The target is going to be the length of the pole projected from the moment of the breakout. The next one that I want to talk about today is the bullish falling wedge, and it works like this. We are going to have this level of support down here, as you can see, and a level of resistance above here, like this. Resistance. So we are going to have bearish movements like this, touch the level of the support, go to the resistance, and we are going to be bouncing in between the supports until finally we are going to break to the upside. Yes, it is a bullish pattern and usually it breaks to the upside. Once we see this happening, you know already we have the check right here. That's our entry point, and the target for this one is going to be all the way up to the highest test of this resistance. So it means in this case it would be all the way up to this level right here. And the exact opposite to this pattern is going to be the bearish rising wedge, this one. In this case, this line here is going to be our resistance and this one our support. So the price action is going to come from the downside and it is going to act like this, for example. From this point, basically the same thing guys. Once we have this breakout to the downside right here, this is our check, this is our entry point, and the exit point is going to be all the way down to the level of the lowest test of the support right here. So entry point, exit point, that's our trade. Next, very common as well, triangles guys. We have three different types of triangles. The first one, let's talk about ascending triangle. Ascending triangles are bullish patterns and they tend to break to the upside. So they are formed by a horizontal level of resistance like this one and by an ascending support like this one. The price action on this case usually is going to come from the downside as well, like this, and we are going to be bouncing in between this support and resistances until finally we break it to the upside. And once we break to the upside, that's our entry point. And how is the target calculated on this case? We are going to take the full height of the triangle like this, and we are going to project it from the moment of the breakout right there. So this area right here would be our take profit. Opposite to this one, we are going to have the descending triangle. Basically the same thing guys. We are going to have a horizontal level of supports down here and a descending level of resistance up here. Price action coming from the upside, bouncing here, bouncing until we finally break it to the downside. The target, you know already, the full height of the triangle like this, projected from this point, there you go, there you have your take profit zone. And the last type of triangle is going to be the symmetrical triangle, guys. This one right here, the price action here can come from both sides, not only here, the other triangles as well, but on the symmetrical triangle it is more common to see the price action coming from both sides. So like this or like this. So the ascending triangle is bullish, the descending triangle is bearish. What about this one? A lot of people say that this one is 50-50. 50% to break to the upside, 50% to break to the downside. But this is usually a continuation pattern, guys, so pay attention. If we are coming from the upside, then the highest probability here would be to break to the downside and continue the bearish trend. If we are coming from the downside, then most probably we are going to break it to the upside and continue our bullish trend. And to calculate the target, you know already the height of the triangle projected from the moment of the breakout. There we go. If we are going to break it to the upside, then this would be our take profit. If we are going to break to the downside, then this would be our take profit zone. And if you're a beginner, you are definitely searching for an exchange to trade as well, guys. So my recommendation to you, my #1 exchange, Bybit. This one right here, it is very friendly user. I use this exchange for a long time already, 3-4 years, never had a single problem. And that's why I recommend this one to you guys. So if you want to sign up to this exchange, use the link on the description of this video right here. The first link is going to give access to Bybit, and if you use this link right here, you can claim up to $30,000 bonus. But they require KYC, so if you don't want to do the KYC, then I would recommend to you Bitflex, the second link on the description of this video. Using this link, you have free $10 if you deposit 100. And also on the description of this video, you can have access to my free Telegram channel. Don't forget to click there as well, join our community, leave the like. And before I go, guys, of course, I have to tell you, nothing on trading is 100%. So all these patterns that I just showed to you, so these patterns are real. We very commonly see them on the charts, but they are not 100%. So sometimes you are going to see the bearish rising wedge, which is a bearish pattern, breaking to the upside. Sometimes you are going to see it breaking to the downside, but never hitting the target, reversing and going all the way up. And that's why it is very important to use the stop loss correctly, guys, to protect yourself. If you don't know what I'm talking about, leave your comment on this video. Tell me, I don't know what is a stop loss. Teach me what is a stop loss, and I will make a full video explaining to you how you can protect yourself using the stop loss. And also, if you enjoyed this video, guys, make sure to make some noise on the comment section as well, and I can bring the second part of this video to you guys, teaching you even more patterns. And that's it for today, guys. If you enjoyed this content, don't forget to smash the like button. If you're not a subscriber, subscribe, hit the bell, and I see you in the next time. Stay focused!